Hello and welcome to the Financial Business Intelligence Show. And Ash and I are delighted to sort of welcome each and every one of you who are actually watching on this Saturday morning in Australia or in the Southern Hemisphere. And for Friday night, for all of you in the Northern Hemisphere, on the other side of the world in the US. Thank you so much for joining us. It's an absolute pleasure. Ash, how's the day started for you, mate?
Yeah, super excited to be here, Joseph, and shout out to anybody watching. Thank you so much for joining us. Yeah, it started out superbly here in Southeast Australia. It's quite a mild, sunny day in late winter here. So, yeah, very pleasant start to the day, and really looking forward to diving into some of the shadowy corners of finance.
Pretty much. And what a better way to start apart from basically, a little bit of jiving to Pink Floyd's Money, right? So anyway, so I mean, a lot of you, obviously, you would know Ash and myself. Mostly with Ash, you would perhaps put him to be, a mentor, a coach, focusing on, your bulletproof self-belief. And his mindset fit method is absolutely fantastic. And with me, a lot of you will perhaps equate me to be looking into the personal branding aspect, along with the sales and marketing, etc., and relationship management. However, what brought this show on was the commonalities that we both have in our careers. That is, we are both from the finance industry. We've both been in Australia, as a lot of you might know, for a long period of time. And our similarities in our background in mortgage broking and investment advisory and financial advice, to both corporates as well as residential and clients, is very similar. And we were just thinking along the lines of how important it is, especially during this time, that people do a financial health check, especially when it comes to their finances. I mean, Ash, we were talking about it the other day, right? So
yeah, really well said, Joseph. And we both have a shared passion for, I guess, helping people understand money and help them build a financial fortress for themselves. And there's so many areas, excuse me, around finance that we want to dive into in the coming weeks, right? It's a big topic. Just to add a little bit to your introduction there, in my background, so I left school at 18, had about 15 years in corporate finance, so I've been inside the machine. And I left in the mid-90s, and the last 20, 25 years in entrepreneurship, I've started, built and exited 6 different businesses. And all through that period, it was always about trying to help people understand how money works, how to use it to your advantage, how to make the right decisions based on your long-term goals. And that sort of flowed through to now being in the coaching and the psychology and, as you said, the mindset fit method, which is about, helping people make good decisions about their future. So, yeah, I'm really excited, for myself and for you and for our guests to hopefully highlight some areas of finance that people can go, you know what, I didn't know that. That's really interesting to know. And they can take that away and hopefully use it in their own life.
Precisely. So, without further ado, we'd love to bring on board our first guest for this season of the FBI show, none other than our dear friend, Dino Picella. Thank you so much, Dino. It's such a pleasure to actually have you on the show today. How's the weather up there in Brizzy?
Always sunny, and it's like sunshine and rainbows. I explained it to somebody the other week. But gentlemen, thank you so much for having me on as your first guest of the FBI show. Sounds like it's a criminal investigation about to occur, but it's not. Maybe an investigation into finance, but it's. I'm excited to be here. So thank you so much for the invitation.
Yeah, absolutely. And when Ash and I were just actually talking about the show, Ash came up with the acronym FBI, and I was like, we have to go with that. That is brilliant. Absolutely fantastic. So, the FBI show acronym is absolutely, Ash's brainchild. And, I loved it the moment I heard about it. So I think it's absolutely brilliant because, yes, we are going to be interrogating you, Dino, for sure. to try and bring out, certain, words of wisdom and golden nuggets that you've obviously accumulated over your career in the finance industry. But we also want to talk about things which a lot of people don't talk about. I'm talking about the big banks here. I'm talking about, businesses, etc. Little things which consumers need to know on how they can manage their money better, so to speak. So for those of you who don't know Dino Pacella, I would request you to firstly come out from under a rock and obviously, follow this amazing gentleman, who has been on LinkedIn. He has actually been a very, very big influence in my LinkedIn journey, for sure. I can definitely attest to the fact that, if you're looking at someone who is brilliant at getting you to get forth your personal branding out there in the market, and basically also ensure that you're focusing on your why. You can't get past Dino. So thank you, Dino, for all your support. Through the last couple of years now, just been over 2 years that I've been on LinkedIn at this present moment, and it's been an absolute pleasure. But Dino started his career as the branch manager of Commonwealth Bank. So he was part of the big four, in the Australian financial economy. And then, he's moved into different companies with the Suncorp Group, as well as, he was with Capify Australia, which is more like an aggregator, of the major banks and financial solutions, etc. So, and now, he is the national manager of partner acquisition at Marketplace Finance. So we will be discussing with Dino, his journey. So thank you so much, Dino, for taking the time out once again and joining us on this episode. Really appreciate it.
Absolute pleasure. And your introduction seemed to be getting better and better with every show or live.
After that introduction, that's fabulous.
Exactly. If I can just leave now, I think we're winning.
That's brilliant, mate. That's brilliant. So, Ash, please go ahead. Why don't you start with the interrogation, mate?
All right. We just need a big light shining on top of you and a few beads of sweat on your forehead, Dino. That'd be perfect. No, seriously though, I mean, what we really want to hopefully get to is, part of your journey that people can relate to. And I think one of the things that might be similar in your journey that's been in mine is working what I would call inside the machine. Working inside the corporate side of banking, where 99.9% of people are on the other side, and they only see what the banks want them to see or big business want them to see. So I'd be really keen to throw over to you to give us, a bit of your journey about what you saw on the inside and perhaps what led you to moving away from that big end of business and going into sort of the mid-sized business. Can you talk us through that a little bit?
Yeah, absolutely, Ash. Well, going back through my experiences, it probably has changed over the last 5 or 6 years, whether that's been forced by regulation or actually forced by a consumer standpoint within the market. But a lot of things took me throughout the journey in Commonwealth Bank, and I stayed there for around 10 years. I did go back in a couple of times, which a few people may not know of, or probably a lot of people don't know of. But going through that, they had a very, very heavy sales focus. Okay, and I'm sure people will remember if they walked into any big four, early 2000s, late 1900s, even going back into maybe 10 years ago, I still know people who come to me and go, "Oh, I dread going to the bank. I don't really want to go into a retail outlet because they're going to ask me about, do I have a credit card? Do I need a personal loan? Do I need to upgrade my car?" And I feel like I get interrogated, and all I want to do is take out some money or put some money in. And that was a strong focus when I was working for one of the big four banks. And even though we did it in a way that was going to be very consumer centric and we wanted to help the customer, there still were those targets, and there still were those heavy targets from each individual and each job title within the organization. So a lot of people, if they weren't feeling like, I'm not a salesperson, I can't do this, therefore some of them started struggling in their positions. But they were wonderful people. They put their customers on a pedestal, and that's ideally what they wanted. So I'm glad to a degree that the regulators have changed that now through ASIC review and CEDRIC review that we saw over the last couple of years, and that banks are now really focused on the customers, and it's more around the activities that people are doing with their clients rather than just hitting a sales number. So I mentioned that because that sort of dragged me away from that organisation, and I moved over to Suncorp, where I stayed for 7 years, and first joined them as it was a regional support leader role. The easy way to explain it was a state operations manager role. So I wanted to maybe remove myself from the forefront of selling and move into, I suppose, the nuts and bolts of making an organisation tick within that WA network, but having some influence in where I could potentially change what I was doing at Commonwealth Bank and move it into Suncorp and have a little bit of an impact from people at the forefront that where I was, to go, hey, listen, maybe we can treat our customers different, and maybe this is a different approach that we can have moving forward. And I like to think I did that a little bit within the 2 years in that role, and then obviously moved into the broker channel where my passion lies with now. So hopefully that gives you a bit of that insight into that one, Ash.
Could I jump in? That's a really good point, Dino, and I'd like to pick up something you said there and maybe just scratch a little bit deeper. And it sort of goes back to that change in eras where banks went, I guess the bank service culture collided with a sales culture, particularly when the Commonwealth Bank and other banks were sold off. So they were government-owned institutions and were sold off to floated on the stock exchange. So they collided with a sales culture based on profit rather than a service culture. What were your sort of learnings working in the Commonwealth Bank that you took out of that sort of, I guess, informed you as to how to combine service and sales that you've taken into, your career from that point onwards?
Yeah, that's a good question, because I took a lot away from Commonwealth Bank. So don't get me wrong when I'm saying they had a strong sales culture. I'm not talking that was a negative aspect. The people that did it and did it well, listen, the customers at the end of the day, they benefited from it. Okay. But the culture that I went through was, they had I can't remember the organisation, but there was an American gentleman who owned that training company where the Commonwealth Bank had implemented, and it was fantastic. I took to it to like a duck to water. And it's a lot of that implementation, which I take through to bringing on new partners with Marketplace Finance now. But the main one was all about, if you're doing a needs analysis, and brokers obviously need to do their needs analysis, it's all about what your customers are doing now, fitting into their lifestyle, and what do they actually want to achieve, what's their financial objectives. And it's using that digger technique to actually ask those right questions and go, hey, listen, we're not just here to do an application, or not just here to sell a product. We're here to actually make your life better, okay, in one way, shape or form. So how do we do that? I suppose the highlight, I don't know if I answered that correctly, Ash, but the highlight of that 10 years in the Commonwealth Bank organisation is all about ensuring that every time you speak to somebody new, I think the terminology they use through the American gentleman, if I remember correctly, so this isn't mine, it's always their opening night. And right. I'm sure people have heard that, but it's just like any Broadway plays that they're doing, maybe 2 or 3 a day. People are coming for the first time to see you, so you need to treat them that way, right? You need to be forward and ensure that level of respect, that professionalism, that integrity, that trust is always there from every single interaction, whether it's the first time you've met somebody or it's the 100th time you're having a coffee with them. And that's the biggest thing that I took away in that time, and it seems to be something me well.
Spot on. And I think, and Dino, thank you for sharing that. And Michael's actually brought up a very, very interesting point here, which is quality and value over quotas. I'm going to go a little bit into this because, this is something which people actually are scared of. Being missold by people in the finance industry, something that they don't require or they don't quite need, so to speak. And I'm sure that all of us have come across people like that, who have advised people to do something which may not have been in their best interest. And that is one of the main reasons as to why finance brokers have got a bad name. I mean, they do a great job, absolutely fantastic, phenomenal job, but they do also get a bad name because of certain people in the industry who actually do the wrong thing by people. I mean, Dino, based on your experience, having worked for obviously one of the big four, the Commonwealth Bank in Australia, and then with Suncorp Group, which is also a very, very big company, but you also worked for smaller SMEs as well. who are focused on obviously being able to provide clients an aggregation of all the different offerings that the bigger banks have, so to speak. What do you think? I mean, where is the pressure more on finance brokers, in the bigger companies or in the smaller companies? Do you have a little bit more independence to basically focus more on value rather than quantity? Because we all know in the finance game, in the sales game, quantity does matter, because that's what you're judged on your KPIs, right?
Yeah, absolutely. I think if you're looking at larger organizations, and we're talking maybe brokers who are employed brokers here, okay, majority of them, I don't think, and as you probably can jump in here, there's probably a very, very small percentage that are on a good base remuneration that would go, listen, if I don't hit my target, I'm still living comfortably off the rent that I'm receiving. That's not very common within the broking industry. So majority of brokers are self-employed, they're business owners. So that value aspect that they need to deliver to their clients becomes crucial in them expanding their business and continuing to get money in the door, because at the end of the day, they probably have a family to support or put a roof over their own heads. So not only is the value important, how they deliver that value, how they continue expanding their business and looking after their existing client base becomes extremely vital as well, because they don't want clients running off the back, because brokers get remunerated when clients are actually staying on their books as well. Yeah. So it becomes vital. So I think, trying to answer if it's important for those larger organizations in regards to numbers to smaller, I think the gap was probably a lot wider maybe 3-4 years ago prior to the Royal Commission. I think it's squeezed, and it's squeezing even further now, because we're seeing the introduction of the best interest duty clause going through. So everything needs to be consumer focused. And if it's not in that best interest for the consumer, then it's not presented to them, or it shouldn't be presented to them. So those points. Yeah, so those little, I suppose if you wanted to call them cowboys that were in the industry, and every industry has these, Joseph, finance broking industry was not immune to it. That might have gone from that to this now, because they're getting squeezed out because they don't belong. They get caught out. There's hefty fines. There's even jail sentences for brokers doing the right thing. So we're not seeing those press releases, those news articles come out from people doing the wrong thing within the industry, as it might have been in the early 2000s. So hopefully that tackled a little bit. But Ash, did you have something on that one as well?
Well, I've got a lot to say on this topic, a lot to say. And some of it probably can't go to air. So maybe I'll just go with what can go to air. But look, just to add my 2 bobs worth to that, is going back to, when banks were trying to add sales to what was traditionally a service culture. Banks were always considered an essential service. It's where you go to deposit money and borrow money. That's essentially it. That was banks' job. Then that changed in the mid-90s into the early 2000s, and I can tell you there was a day in the early 2000s where the Commonwealth Bank swore black and blue they would never enter the broking industry, and it's on the record, right? So this is because I've been in broking since it began. So banks resisted broking because broking only emerged to fill the gap that was left open by the banks when they switched from service to sales. Now, we all understand why. You've got to make profit. You've got to generate product sales, and that's totally okay. But the problem is that the service culture got left behind, and brokers emerged to fill the gap. And brokers did a fabulous job filling the gap. Was there the odd broker who did the wrong thing? Of course. But I can tell you right now, there's more fraud inside banks than there ever was inside the broking industry. But that's a conversation for another day. Maybe we'll touch on that another day. And that's not just, there's 30, 40, 50,000 employees in a bank. But the point I'm trying to make here is that the clash between service and sales is one that's been raging for 20 years. Broking has now moved to a strong compliance culture. Back when I started broking, you could essentially be out of prison and go be a mortgage broker the next day. It was very early days. It was emerging. It was considered a cottage industry. Now it's a professional career. It's a business. There's a lot of requirements. But the essence of what brokers do remains the same, is they act between product producers and the public. And this is where there's an issue around product producers also being the salespeople. So when you're selling just your own products, there's an obligation to justify your products over the competition, whereas what brokers do is obviously compare multiple different products and make a selection based on what they believe suits the customer best. That's the proposition, as well as what Dino said, I think, Dino, where I don't know about your opinion, but I think a big chunk of what a mortgage broker does is to insulate the client from a lot of the rubbish that goes on behind the scenes trying to get a loan through the system. You know, there's a lot of dramas, hassles, phone calls, chasing things up, arguing the case, making sure things meet deadlines, making sure all the stakeholders in a property purchase are updated with the progress. Nobody else does that other than the brokers. The brokers do an incredibly amazing job, and I'm not just saying that because, you know, I work with brokers. I've just seen it on the ground day in, day out. But you're back to your sort of experience, Dino. How do you marry up yourself that sales and service culture as you move into, you know, this part of your career? You know, obviously with your knowledge and insight and wisdom that's been, you know, gained over your many years in the industry, I'm really interested to see your personal perspective on how you package that up as you see it.
Yeah. I don't know if you saw a video that I posted yesterday, Ash, but it tackles this question exactly. So
I better go check it out.
Perfect timing. I always looked at it as the sales and service coming together with three questions that I'll need to answer for whether it's a partner, prospect, client coming on board, right? It's, can I add value to them? Can I help them expand their business? And can I help them get better at doing their business? And I think if you can, and yes, the first one probably correlates with the other two, but if you can answer those and articulate in the way that you can deliver on what you're talking about, then you're providing a service. And if you're providing that service 99% of the time, the sales are going to flow from it. So I don't need to pitch an offering, pitch a product, pitch a service, because I'm actually pitching to the prospect and what they want. Because at the end of the day, if yourself, Ash, and Joseph didn't know each other, but I introduced you both where there was correlation for both of you to do business, meet new people, increase revenue streams, and expand your businesses, how good am I to your business from that perspective?
Well, you're very valuable, absolutely, Dino.
Absolutely.
And I think that sort of the takeaway for me for what you're saying, if I could sort of capture it, hopefully, is that the difference between those days when a bank would try and tick boxes to offer you a bunch of products, it wasn't based on need. It was based on somebody's watching me, so I need to be offering you products. Whereas what we're talking about now is building a relationship with someone based on what they need, based on their plans for the future, and then offering them something that solves that need, rather than saying, I've got all these things, do you want some of them? You know, which is that old banking culture, which hopefully is changing, but that's the way it used to be. And I think that's where those small and nimble mid-sized businesses and broking businesses have really captured the public's hearts and minds. And I don't think you can argue with that, right, Dino? Because what are we, nearly at 60% of all mortgages in Australia are done by brokers. I fully expect that to go to 70 or 80% over the coming years. So the channel of consumers turning to brokers for a trusted advice is beyond doubt, because the numbers don't lie, right? So maybe that's how I could sum it up in my words. I'm interested to ask you, if you don't mind, Joseph, if we might just take a little bit of a slight change in direction. I'm interested in Dino's opinion on the current craze. The current craze, I mean, there's Afterpay, Sezzle, Split It, right? The current craze, particularly, it's been turbocharged by people having a lot of time at home on the internet, seeing things they want and probably buying them and putting off paying for it till later. So it's the whole buy now, pay later craze, and I guess good debt versus bad debt. What's your position on good debt versus bad debt and buying things and paying for them later? I'm interested.
I love that question, Ash. But before I get Dino to actually talk about it, I'd like to just take this moment to thank everyone who's actually tuned in. We've got people from Europe, from Romania, from the United States, from Nigeria, from Australia, of course, from Melbourne, from Singapore, from India. So thank you very, very much for actually joining in and putting in your support and the comments and basically sort of giving us your feedback. That is absolutely essential, because what we do here, especially as content producers, is basically try and add value to our network. And the feedback that you do provide us, and all three of us here are content creators here on LinkedIn. You need to follow Dino on YouTube as well. He's absolutely fantastic with his inputs and advice and insights on personal branding, etc. But the main thing that content creators look for is basically acknowledgement that at least what they're putting out is actually being of some value to people around you. So thank you so much. I mean, we would not be anywhere without all of you and all of your support from around the world. So thank you very much. Really, really appreciate it. And Dino, great question. And also would love to sort of tell everyone to put in any comments, put it in the comments below if you've got any specific question with regards to debt, with regards to credit card debt, with regards to mortgages, with regards to managing your finances a little bit better, etc. We will be going a little bit further into it. However, if you've got any specific questions, please put that in the comments and we'll definitely sort of answer that during the show. But Dino, Ash has brought up a fantastic question. People are in this craze of buy now and pay later. People are, because they are having the opportunity to basically afford something which they don't have the money to buy. I mean, this are we heading towards something again like that? The economic and the financial bubble. In the last decade, where it's just overinflated with regards to spending. As well as people's borrowing capacities.
Yeah, it's certainly something that's, I suppose, getting a lot of light now, given I suppose more people are spending time at home. And Ash, I don't know if I talked about posting that video last night, but I don't know if you've got a camera set up at my home in Perth as well, because I was having this exact conversation with my 17, nearly 18-year-old daughter.
Here's the FBI show.
This is the FBI show. That's right.
I will be doing the microchip scanner.
The sweep, yeah.
Bloody hell. So that let me just tell you how that conversation went a little bit, because it was quite interesting how I looked at it from a 43-year-old father to a 17, she's 18 in a couple of months, where she comes to me and goes, Dad, she's working, which is great. She's putting a bit of money aside, but that last month has been heavy on the expenses for her. And she goes, oh, Dad, I need to buy this ball dress. It was a couple of $100. And, oh, look, they do Afterpay on it. I said, okay. I said, what's Afterpay? So I wanted her to explain it to me. She goes, oh, you just get it now and you pay it later. I went, no, I can't disagree with that. I went, yeah, that's fine. I said, do you know how much you got to pay later? What's the terms on it? What's it look like? Oh, I don't know. They tell me when I do it. I said, okay. And I said, what happens in a month or 2 months' time if you have another heavy expense month? Are you going to be able to afford it? Well, yeah, I'll make do with it. I said, okay. I said, why do you want it? Because all my friends are doing it, Dad, and they're getting this stuff.
Yeah.
Okay. So I said to us, just because all your friends are doing it doesn't make it right. And I think this goes with everybody. Just because everybody else is doing it, should we be following the trend and getting that instant gratification when we purchase something rather than actually saving for it and doing it forward? Now, if we move into that in good debt versus bad debt, not even though we label some things as bad debt, maybe a credit card. Right? Mm-hmm. If the right people are in possession of a product that where 99% of people aren't using it the way that it's meant to, from a consumer point of view, not a bank point of view or a financial services company point of view. But if a consumer grabs their credit card debt, say they have a $2,000 limit and all they do is put their groceries on there and their bills, and then at the end of every month, they go in there and they sweep it, or they have an auto pay that clears off that balance, and therefore they're not accumulating any interest. They may even be on a no annual fee credit card, so it's not costing them anything to utilize. And they may need that credit card in particular if they're needing to do certain purchases or bookings that maybe a debit MasterCard or a debit Visa doesn't allow you to do. So some people are utilizing the bad debt to their benefit and in that good structure. But if we look at generic good debt, listen, if it's used for, I suppose, a purpose where you're purchasing an asset that's going to appreciate in value. So if we look at a mortgage, and 9 times out of 10, we'll start seeing the cycle increase, even if it does take a longer period of time. That normally 7 to 8 years, we'll start seeing that cycle in real estate. If you're talking investment property, commercial property, which I'm into now in the commercial finance space, then those seem to be the highlights where it comes to good debt. You know, what's in it for me? Am I going to benefit of it? Am I building some equity off the back of that? Do you get that when you purchase a brand new motor vehicle? They say it depreciates, 15-20% as soon as you drive it out of the car yard?
Pretty much.
Again, that's hard to disagree with. It's right. So does that become bad debt? But then do we see different avenues? Is leasing a vehicle better for yourself? Are you running your own business? Does it actually suit you? So it does get very complex when you look at particular certain aspects of debt. So hence why I'm such an advocate of brokers, because even if a broker will know 80-90% of the questions that you ask them, but if they don't, they've got such that vast network that if they need to go speak to an accountant to structure the business, if you want to go lease a motor vehicle, then they've got that within their network pool and their close network pool, right? They've got solicitors if you're purchasing property. Whatever you need, a broker will get access to it if they can't answer that question directly. And that's what I love about it. Just like if you went to a GP and you found they got cancer, touch wood, no one has, but they're not going to treat it. They're going to send you on to a specialist, correct? So I'm not saying brokers aren't specialists, but there are certain things they're not going to do. Most of them aren't going to do your accountancy work and your bookkeeping come in the financial year.
Oh, it's so true.
Yeah. So
can I take you back to something that you said? Just for a minute, Joseph, if that's okay. You touched on something that I think might be Michael Baker, I think, might have said in the comments. That's the gap in knowledge as people come through their teenage years into adulthood about debt and money. And it's something that, you've obviously having that conversation with your daughter. I think it's incumbent upon us to talk about this in a way that hopefully people that aren't used to debt, aren't used to the complexities of managing debt and the impact it can have on decisions you make later in your life. Like the decisions you make now about debt, in 5 years' time, will have an effect on your ability to buy a house or to do that. So I think this topic of passing on knowledge and wisdom about debt, good debt, bad debt, in between debt, and how to understand the implications of decisions you make now onto the future. I think that's a really, really important topic, and it's probably far too big for us to cover in, whatever time we got left. But I'm just interested in you giving perhaps a bit of an opinion on, what we can do and maybe where education's at in the system about teaching about debt and money. Like, Dino, I don't know, I reckon you could walk the street and line up 100 people and ask them to explain how interest works on a mortgage, and there'd be 1 in 100, if you're lucky, who could actually explain to you how interest works on debt.
Yeah, I think you're spot on, Ash, and Michael's got some good points as well in regards to the comments, and so are some other people. Hard to keep an eye and concentrate on the questions coming in, but I'm sure Joseph will check them up on the screen if there are any questions that we need to tackle. But even going into that education piece, there are some good individuals doing it. There's an association, so MFAA, for people that aren't aware in our industry, the Mortgage and Finance Association of Australia, do a Global Money Week every year, and brokers are encouraged to go and do financial literacy presentations at schools, which I think is fantastic.
Yeah, love that.
I think they should be Global Money term, and they should be running it for a 3-month period rather than just a 1 week. So I think that's fantastic and needs to get more recognition on what they're doing. But yes, it does need to start from the home. But if you've never been educated in running, I suppose, a financially stable household, right? And there's people that haven't, and that's okay, right? Because we just haven't had it, okay? So then who do you get to help educate either yourself or the younger generation coming through, okay? So there's different avenues from it. Should it be put in schools is probably a big topic that's been going around and around, and schools are slowly touching on it, I think, but very at an overarching level around what a credit card looks like and what a personal loan is. Well, I know my daughter's school does. It doesn't go into the nuts and bolts about the effect of a bad debt, how that affects your credit score, and then potentially if you want to purchase a house, the flow-on effect that you mentioned, Ash, is really big. But I would say to anyone out there, if you've got children, I've put a little pact with my daughter, and if she breaks it, you may never hear from her again. We made a pact that if she gets any loan or credit card pre-approved in the mail or electronically, that she has to come to me to talk about it before she does anything. Yeah, and it's not to say that, no, I don't want you to do it, but it's let's have a look and let's open up that door to further discuss then if somebody sent you a pre-approved credit card for $2,000, is that suitable for you, what you're currently doing? Or do you go, yeah, I want to take one because I haven't got one, but I only want it with a $1,000 limit for those emergencies or whatever it may be. Yeah. So then you can start talking about it rather than just going, oh, shit, they give me $2,000. That weekend I've got the card. I've gone to the shops and I've spent $1,500. I've taken the friends out to the movies. I've bought some new clothes, and all of a sudden I've got to start paying 2.5% of that outstanding balance every single month, and going, oh my God, I'm earning $400 a month. I've got to pay $200 on the credit card debt. I can't do that. And then therefore it's that roll-on effect, and it's all of a sudden, you can pay that. That goes into arrears. There's a mark against your credit file. 5 years later, I want to buy a property. Your credit score's affected. How that plays in with open banking, which is being introduced into Australia early next year, that's probably again, Ash, another point to discuss, or another topic for another day. We need this younger generation, that open banking. It's not just around negative; it's around positive, around how you actually deal with your debts and your bills. So you want to be able to be doing everything right now. So in 2, 3, 4 years' time, you've set yourself up for when you do want that lender and you want that broker to help you. You're going to go into it because it's a complex world, borrowing money at the moment, and I can't see it getting any easier.
Yeah, and you've got to be so careful. And you brought up this point so well, Dino, and Ash. Thanks for bringing that up. It's all about the part of instant gratification. Instant gratification without actually sort of focusing on the long-term aspects and elements that may actually affect you in the longer run. And that's happening because people don't have an understanding of the actual product and what it's actually offering. And it's so important that there is financial education given to youngsters from a younger age, especially by their parents. And I love what you said right now, that you've actually basically, it's an unspoken rule at this present moment with your daughters that they are not to apply for things without basically running it through you.
Oh, it's financial literacy, right? I mean, it's I think it was and shout out to Brian Remo. Great to see you, Brian, over from North America, who touched on this, and a couple other people have mentioned the same thing. The key is financial literacy. I mean, and you touched on it, and if one generation hasn't established financial literacy, how do they teach the next generation financial literacy? So there needs to be intervention. There needs to be an external intervention to come in and actually break that nexus, and so that there can be generational change about financial literacy. And one of the problems that we've got, of course, is that big business, and I may offend some people when I say that, but big organisations don't want the Australian public or any public to be financially literate. That's the problem. Because financial literacy will limit people's desire to take out certain credit products that in the lowest interest rate environment in history are still charging 15, 18%, because people don't have the financial literacy and the emotional literacy to make good decisions about that debt. So it's a really passionate area for me, as it is for you, Dino, and I'd love to actually pick this up in another conversation and focus on that financial literacy piece, because I think that's where the the solution for the future will come from.
Well, you've just absolutely literally taken words out of my mouth. So, and all of you who are watching, I actually did a share on LinkedIn a couple of months ago. But go on YouTube, and what Ash said right now with regards to financial literacy. Just search Robert Kiyosaki, Keep 'em Poor. Just search that and watch that video. It's about a 10 to 11 minute video, and it will explain to you precisely as to how important financial literacy is, and how it's not in the best intentions of governments, of corporates, of the banking industry to actually basically make people understand the ins and outs of how they can actually get their finances to work for them. Like a lot of people feel with regards to bad debt. I mean, you can actually use the bank's money, as Dino was talking about, using a credit card, and that's exactly how a revolving line of credit works, especially in Australia. It's basically using the bank's money to basically pay off your debts faster. As simple as that. But you have to be disciplined about it. You have to follow a specific set of rules. You've got to, you can't just, go and do whatever you want just because you've got access to money. You've got to be able to make sure that access to money is actually, it's financially motivated. It's actually, hitting in with your broad budgetary requirements, etc. But Dino, so excited, with your journey into marketplace finance. Please tell us a little bit more with regards to marketplace finance and what you guys are doing. Would love to know.
Yeah, thanks, Joseph. And before I answer that question, I think Chris put a good point. He goes, education around financial literacy. Yeah, that was the one. It's so crucial. Needs to be. Chris, I'm with you, mate. I wish that was around more when I was growing up. Yes, my parents had an Italian background, so that European mentality that all you do is save, and you don't take out credit cards and debt. So, but listen, that was the basis of my education around finance, was just save and don't spend, and save and don't spend. So when I wanted to start spending, I felt guilty. So did they do a good job on it? It hit the surface, but you're right. If kids now are getting that further and having those deeper, better conversations and understanding it, listen, if they get it through schools, then that's going to be even better. But Ash said that's probably a bigger reasoning why we're not seeing that already in the education system. But anyway, well, I digress from the question, Joseph. Marketplace finance. Well, I'm excited to be working for this organisation, and I'll tell you why. So this organisation, so Marketplace Finance, is a introducer portal into our main company, or our consumer-facing company, which is Simplicity Loans and Advisory. So shout out to those guys if they're watching, our MDs, Matt and JP. So we've got a head office based in Sydney, and we are heavy in the commercial sector. So we do all commercial finance. We don't touch on that residential lending market that I've been used to in my past life. So it's a new challenge for me. It's an exciting challenge. And with those challenges comes new learnings and new people. But marketplace finance, what I really like about it and what I'm passionate about it is, within the broking industry, there's that D word that's been thrown around for 3 or 4 or 5 years. Ash, do you know the D word I'm talking about?
Inform me, Dino. I'll leave it to you.
All right, it's that diversification word, and we've seen summits, people attending it purely just on how to diversify your business and go into to a residential broker, do you go into commercial lending, asset finance, whatever it may be, or vice versa as well. And brokers are only riding around that 20-25% mark of commercial lending throughout the Australian market. So there's such a large scope to increase in comparison to the 57% I think we saw from the last quarter in the residential market. So how do we get more brokers assisting clients that are going to fall into that commercial sector, whether it's a commercial property purchase, a commercial development finance? Are they in raising capital as an investment group to continue moving forward on a project? Is it equipment finance for the business? How do they do that? And Marketplace is great because we bring on introducers. They're not necessarily just brokers. They could be accountants. It could be people in the commercial space, business brokers, that have a need for their clients to borrow funds for a commercial purpose. What I'm loving about that diversification piece is not just about diversifying your business purely to get an amplification or commercialize your product offering and your service suite. We do that in a sense that we work with commercial brokers, and we have 12 experienced people down in our Sydney office, that if you have an opportunity, you can put it through our portal, and a human being will actually grab that scenario or that opportunity, pick up the phone and speak to that referrer directly. What that gives them is the ability, yes, you're going to be expanding your business and increasing your revenue stream because you've got an expert helping you with that commercial end. But at the same time, if you're going to drive that transaction forward, you're going to get on-the-job training and learning. And not just once, it's as many times that you're going to send these opportunities through to us. So I like the fact that we're bringing diversification to life. We're not just talking about it, or we're not just educating you for 4 hours and then go on your way, go do it yourself, because you'll never learn that way. It's so complex. You think residential lending's complex? Go into commercial lending and see if you can do 10 home loan applications every month whilst you're learning your commercial knowledge. It's bloody difficult. Yeah. And we're not superheroes here. Everybody needs some help. You can't be everything to everybody. But I like this model, this service offering that Marketplace has, is that we can actually educate whilst you're actually helping your client and closing a deal. And that is, I suppose, goes to the core of why I love brokers, because they're helping such a wide range of people. And listen, the Marketplace team, I was chatting with them for months before joining them, and we were waiting for, obviously, COVID to settle down a little bit, as much as it was done on a bit of a merry-go-round. But it's fantastic that the passion is there. Talk to new people. How do I assist in their business? And I answered those 3 questions prior. If I can't, then maybe we're not the model, or we're not the service offering to help you expand your business, and that's fine, right? We're not going to help every single person, and it's just like a broker's not going to know everything. I'm not going to be the right fit for every single introducer, but the quicker I know that, then the quicker we can let people get on with what they need to do. But if we do it well, and I can really help some people who can therefore help their customers. So hopefully that gives a bit of insight into what I'm doing.
No, it gives a brilliant insight into what you're doing. And y'all are basically, from what I'm looking at it, Dino, you're basically sort of hitting it right at the roots, and that is where it's important. If you have brokers who have that that access to being able to do the right thing, and they're trained the right way, they're going to do the right thing. They're going to do the right thing to their customers. It's a knock-on effect. So and if you're giving them the opportunities and the availability of the right tools right at the very beginning, those are the tools that are going to get translated into action for their customers moving forward, which is going to be assisting them with their financial decisions moving forward as well. So I mean, that's lovely. Absolutely love it. Ash, your closing thoughts, mate.
I'm going to somebody and it's a LinkedIn user who hasn't got a name to the comment, but there's a comment there saying we are bringing diversification to life. Dino, I would actually rephrase that as you're redefining diversification. I really like what you said, Dino, and yeah, we had a little bit of a chuckle about the D word, but diversification has morphed away from diversifying as a new income stream to diversifying because it's the right thing to do for the customer. It's it's about being the trusted advisor. And this is what really excites me, guys, about the mortgage broking industry in Australia, is mortgage brokers have really emerged as the center of the trusted advisor relationship for clients. So it's really important for mortgage brokers to have relationships, with really intelligent, experienced, and customer-focused people like Dino. And I can only encourage any mortgage broker catching this to reach out to Dino. There is no one better in the game in the country, and I'll say that hand on heart than Dino. So 100%. But diversification's about doing the right thing for the customer. If you get paid a commission or something for doing that, fantastic. But it's not about that. It's about being that trusted advisor for the customer. And like a traffic cop, or like a hub and spoke, you've got a set of relationships that have high degrees of expertise in particular areas that you can recommend your clients to based on the needs that you help them identify. So, I love that, Dino, and I think it couldn't be a better way to sign off than to completely agree with what you just said around diversification. It's super important.
Thank you. Thanks, Ash.
Love it. So, I mean, thank you very much to each and every one of you who's actually tuned in and supported the episode. Please share it with people who you feel might want to listen to some of the nuggets of wisdom that Dino has shared with regards to financial literacy, which Ash has touched upon as well. So and please share this with your network. We'll be coming to you every Saturday with with some amazing guests from the finance sector and related sectors, so they can share their journey. They can share what they have done to basically make a difference in their own personal and professional existence, so to speak. But we really appreciate all the love and support that each and every one of you have given, and it's an honor and pleasure to actually be partnering with Ash on this FBI show. And Dino, we couldn't have requested or expected a better first guest. Thank you always for all your support. You do a great job. Hand on my heart as well with what Ash said. Anything to do with mortgage broking or broking in general with regards to the finance industry. If you're watching from Australia, you cannot go past Dino Pacella. He's a thought leader in that space, and he has done so not just with social proof, but actually backing it up with actions. So thank you once again for everything, Dino, for whatever you do for your network. And Ash, any ending words from you, mate?
Well, just reiterate everything you said, Joseph, and thank you so much for the professional job you do with everything. It's a real thrill for me to be collaborating with you. And Dino, you've set the bar incredibly high, mate. Now we've got to find some guests that can measure up to your high standards. But no, seriously, mate, thank you so much. From a guy who's deeply within the finance sector here, I can only speak to how highly regarded Dino is as a man of integrity and passion and dedication. So it's a real pleasure to have you on, Dino. Thanks for sharing some of your story, mate. And I've got no doubt we will have you on again someday not too far away.
It's been an absolute pleasure, gents. Thank you so much for having me on, inviting me. A great way to fill in a Saturday morning. So I encourage people to mark this in your diary and ensure that you're watching them every Saturday. I know I will be moving forward. I'd rather watch a replay of Desperate Housewives on Channel 7 or whatever the case is. So this will be my every Saturday morning at 11. I'll be tuning in. So thank you very much for having me on, and thank you for everybody for tuning in and leaving all the comments.
Likewise. Appreciate it. Thank you so much, gentlemen. Take care. Bye-bye. Have a lovely day. And thank you, everyone, to everyone who's watching. See you next Saturday at 11 a.m. same time. Thank you. Take care.
Bye.